Welcome to The Explainer. Today we're doing a deep dive into Tesla's Q1 2026 investor update. We're going to get past the headlines to really decode the numbers and, maybe more importantly, map out the company's huge strategic pivot. This is a future that's not just about cars anymore. It's about AI, software, and, robotics.
Okay, before we jump in, just our standard disclaimer. This explainer is purely for educational purposes. It is definitely not financial advice. Everything we're talking about today comes directly from the materials in Tesla's investor update.
So here's our roadmap for today. We're going to kick things off with the bottom line financials. Then we'll look at how the core car business is actually paying for this massive expansion into energy. From there, we dive into the real heart of the story, the AI and software engine that's powering their future. Then robotics. And finally, we'll pull it all together to see what the global strategy really looks like.
All right, let's get right into the numbers. We're starting with the answer first, the headline financial figures that really define Tesla's first quarter.
The top line? It's pretty impressive. Total revenue for the quarter came in at nearly $22.4 billion. That's a solid 16% jump from last year, and that growth is really the foundation for everything else we're about to talk about.
But the real story here is profitability. GAAP operating income, that's the actual profit from the main business, hit $941 million. And get this, that's a 136% increase from a year ago. That shows a really incredible leap in just how profitable their operations have become.
And this is absolutely crucial for a company that's investing so heavily in its own future. It is generating a mountain of cash. Tesla ended the quarter with $1.4 billion in free cash flow. That's the fuel for the enormous expansion we're about to get into.
Now, if we pull back for a second, this table really tells the story. It's not just one metric that's looking good. I mean, look at this. Total gross profit is up 50%. Operating cash flow up 83%. When you see this kind of strong growth across the board, you know it's what gives a company the confidence to make these huge long-term strategic bets.
So let's turn to the automotive business. You got to remember, this is the foundation that everything else is being built on. But it's changing. It's no longer just about the final product. It's about creating the hardware for a massive software ecosystem.
In Q1, Tesla made over 408,000 vehicles and delivered just over 358,000. Now, these aren't just car sales numbers. Think of it this way. Every single delivery is a new node on a growing network, a potential subscriber to services like full self-driving. It's that scale that's the real key to unlocking those future software revenues.
And what's super clear from their update is that this is just the beginning of a major product expansion. They're saying volume production for both the Cybercab, that's their dedicated Robotaxi, and the Tesla Semi are supposed to start this year. That really signals a strategic pivot towards vehicles that are designed from the ground up for autonomy.
Okay, now let's talk about what is arguably one of Tesla's biggest competitive advantages, its energy generation and storage business. This isn't some side hustle. It's a massive operation that's creating a powerful economic moat around the company.
The scale of their ambition here is just huge. Tesla is aggressively ramping up its manufacturing capacity for energy storage. You can see the California megafactory is pumping out 40 gigawatt-hours of capacity. Shanghai is online with another 20, and a third factory is already being built in Texas. This kind of vertical integration is all about building a dominant, resilient energy supply chain.
And this picture shows these aren't just plans on paper. This is the body-in-white assembly line, basically the frame assembly at the new megafactory down in Texas. Production of the next-gen Megapack 3 is set to kick off right here later this year. This is industrial ambition turning into actual physical hardware.
And that brings us to the real pivot point of the whole story. We're talking about massive, multi-billion-dollar investments in AI and software that are totally reshaping what this company is going to be worth in the future.
It all starts with the physical buildings. This isn't just a server room in the back. It's a dedicated, purpose-built facility at Gigafactory, Texas, designed specifically to house Tesla's next-gen AI training hardware. You have to build the factory before you can build the product.
And here's a look at what's going inside. The new Cortex-2 AI training cluster is now online. And to give you a sense of its power, we're talking about over 130,000 of the industry's absolute top-tier GPUs. This is a colossal supercomputer, and it's dedicated to just one thing: training the neural nets for autonomous cars and robots.
Now, to control the entire tech stack and kind of de-risk their supply chain, Tesla's going even deeper. This is their next-gen AI5 inference processor. The final chip design was finished in April, and in a really bold move, they announced they're actually expanding into making their own semiconductors. Why? They think the rest of the industry literally won't be able to handle their demand, so they're just going to build it themselves.
So is all this massive investment paying off? Well, it's translating directly into high-margin software revenue. The number of active full self-driving subscriptions jumped to 1.28 million this quarter. That's a 51% increase from last year. This is a key metric that shows the real financial impact of their software and AI play.
Okay, so now let's see how all of this, the AI, the manufacturing, the batteries, how it all builds towards Tesla's most ambitious project yet, the Optimus humanoid robot. This is where everything converges. And they are moving incredibly fast. This picture shows that site prep for the very first large-scale Optimus factory is already happening. This isn't some research project anymore. It shows a very serious commitment to making humanoid robots a core part of the business. The scale they're planning for is just immense. The first production line, which is going into Fremont, is being designed for an initial capacity of 1 million robots a year. To put that in perspective, that's more robots than most of the world's car companies produce cars.
But what's really fascinating here is that 1 million units a year is just the starting point. So what's the real ambition? What's the end game?
Well, the company is already prepping for a second-generation line at Gigafactory, Texas. And that line is being designed for a long-term capacity of 10 million robots per year. A number like that signals an ambition to create a market that is just orders of magnitude larger than the entire car industry today.
So finally, let's bring all these different threads together. How do cars, energy, AI, and robots all combine into one single, cohesive global strategy and a clear investment thesis for the future? Well, the shift to a software-driven, fleet-based model is already happening. This table from the update shows the near-term Robotaxi expansion plan for the U.S. You can see unsupervised operations are already ramping up in Texas cities, and they're getting ready to go in several other key states. And this isn't just a plan for someday. There is tangible progress right now. Paid Robotaxi miles nearly doubled last quarter, and fully unsupervised rides have already launched. And critically, they got regulatory approval in the Netherlands, which opens a path to the massive EU market. That's on top of continued demand growth in places like Asia and South America. And really, this one quote from the update just says it all. In their own words, Tesla is signaling a fundamental shift. The future of the company isn't just about making money from hardware. It's about using that hardware to generate high-margin, recurring revenue from AI and software. This is the core thesis for the company's next act. So that leaves us with a really critical question. As Tesla makes this transformation, the old metrics, like how many cars they deliver, they might become less and less relevant. So the new question for every investor, every analyst, is this: what's the single most important metric to watch now? Is it FSD subscriptions, autonomous miles driven, or is it something else entirely? For more deep dives like this one, breaking down the source material on complex topics, make sure you like and subscribe. We'll see you in the next explainer.